It's increasingly looking like a seasonal sell-off might be getting underway in U.S. indices. It's not uncommon for markets to see some weakness in May and June. There is a seasonal pattern to trading in North America and Europe. Usually we get off to a strong start to the year, January through April. May and June are usually a weaker time period. You get a rebound in July, then the really weak period seasonally is between about mid-August and mid-October. Then from mid-October to the end of the year, we tend to see strength again. And in this case, hence the old adage, to sell in May and go away philosophy of trading the markets. And this year it looks like maybe no exception. Although the big exception this year was the huge sell-off in January and February that culminated in a double bottom in February. We had markets roar up out of that through February, through March, continue to climb through April, but now we're starting to see signs of softness here, and I'm getting a sense that we could be getting ready for a bit of a correction in the markets. We saw here a new high in mid-April. This was not confirmed by the RSI. There's a negative divergence. The recent pop yesterday that we had on May the 10th has not been. We haven't had any follow-through on it. Markets are starting to slip back. What is this looking like to me? It's looking like we might be forming the right shoulder of the Head and Shoulders top. Left shoulder early April here on the S&P around 2080. The head just above 2100, and the right shoulder again back around 2080 on the S&P. Adding to this, we have a rising neckline, also adding to a classic Head and Shoulders top forming in the pattern. The right now the key support's about 2040. That's also a Fibonacci level, a 23% retracement of this rally from February to April. Should that break, we could see a more significant seasonal correction in the S&P, perhaps back here closer to 1995 to 2000. We get the 38% retracement plus the 2000 round number. That could be a significant initial support test. Also, if we look, this is about 2110, this is about 2040, so that pattern would measure down to about 1970, which would coincide with this low back in here, and the 50% retracement is in around 1960. So we do have room for a bit of a pullback through the spring in U.S. indices. There's a lot going on that could move the markets over the next few months. We have a Fed meeting, there's a Brexit referendum, there's Greek negotiations, there's an OPEC meeting, there's elections in Australia, elections in Spain. There's a ton of things going on, and a lot of uncertainty out there that could help to spark what's normally a seasonal correction, and on top of which we're going to be in this quieter period for corporate news in between earnings seasons as well. So we could see quite a bit of action in U.S. markets on that.